DSCR loan in 2025. Hey, what's going on, everybody? Jeff Trevarthen, Jeff the Mortgage Pro. Thanks so much for watching today. I appreciate it. I've got a good one for you. These are great loans to do for investors. They're called DSCR loans. And if we, before we get into it here, do me a huge favor. Go ahead and click on that like button if you like these videos. And if you really like them, go ahead and subscribe. You can click that button down below and you'll see when my videos come out. And you'll see when all the new ones come out too. So thanks for doing that. I really appreciate it. I appreciate all the support, and thank you for supporting the Jeff the Mortgage Pro YouTube channel. All right, let's talk about DSCR loans. So first of all, what does DSCR stand for? Debt Service Coverage Ratio is what DSCR stands for. And it's a term that's used in real estate, and you'll see it a lot in commercial real estate. Actually, it's a factor in qualifying for commercial mortgages and things of that nature, but it hasn't been around in residential real estate for that long. And what it really means is, does a property cash flow or not? And when we have a debt service coverage ratio, it basically means that if we have a cash flowing property, then we can get a loan typically on these properties with a DSCR loan going forward. So these are great types of loans. So maybe you don't have a job, maybe you don't have a lot of income to qualify, maybe you have too many rental properties to qualify with debt to income ratio on a conventional loan. All those things matter when you're trying to buy investment property, and they can really come into play. So the DSCR loan solves all those problems, because what we're really looking at is just the cash flow of the property coming in versus the mortgage expenses coming out. And like I said, if it's positive, then we have a pretty good chance of getting a DSCR loan. So let's look at some of the guidelines on these DSCR loans in 2025 to see if this is something that you may be interested in doing. So number one, we can get loan amounts up to $3 million on this. So you can be buying a pretty large size property, and as long as it cash flows with a rental income coming in, you're going to be able to probably get that type of a loan. You have to have down payment and credit and things of that nature as well, but and reserves. But for the most part, you know, that's a cool thing. So these guys can be anywhere from probably $75,000 for a DSCR loan all the way up to $3 million for a size of loan or a maximum loan amount. These are for investment properties only. So anything from 1 to 4 units. So single family, duplexes, triplexes, fourplexes qualify for this type of DSCR loan. This is called a residential DSCR loan. So 1 to 4 units is what we're looking at on these particular loans. This is for purchases, rate and term refinances, and cash out refinances on these types of properties. There is no personal income or employment info that's required of you on these types of loans. This is the huge thing. So like I mentioned earlier, you don't even have to have a job to be able to qualify this. So if you have, you know, good down payment, you have decent credit, you have reserves, and the property cash flows, you got a pretty good chance of getting a loan. So I think that's a great thing, or a great benefit about these types of loans, and they're definitely designed for investors. There's no limit to the number of properties that you can own with a DSCR loan. So, you know, if you're going to go conventional and you're an investor, you're going to run into some trouble starting at anywhere from 4 to 10 properties. And once you get to 10 finance properties, you know, you're probably out of luck trying to get another conventional loan. So you're going to have to go DSCR going forward. But for these, it doesn't matter how many properties you have. We're just looking at property specifics typically for each individual one. Okay, you can do 30-year fixed, 40-year fixed loans, and even ARMs that are available on these types of products. What I see most common is the 30-year fixed. I don't see that ARMs are priced really any better than the 30 or 40-year fixed. So most people stay away from those anyway. And so 30 or 40-year fixed, you can do an interest only oftentimes as well. So if you really want to get technical about your cash flow, you could do like a 40-year interest only loan, which means that the first 10 years are an interest only loan, and then it would become fully amortizing after 10 years for 30 more years if you were to do a 40-year fix with a 10-year interest only on it, which is crazy. Okay, so definitely tools available to help you improve your cash flow the most on these types of rental properties. Okay, you can have as little as 3 months worth of reserves, and if you're doing cash out transactions, oftentimes you don't even need to have any reserves, because we consider cash out as a reserve. reserve requirement. So, but purchases as little as 3 months worth of reserves, the stronger the reserve requirement is that you have. So if you have, 6 months or 12 months, that just strengthens your file, and that gives you all that better of a chance to be able to get one of these loans. But reserves are definitely required in this. What's a reserve, by the way? Reserves just means the principal, interest, tax, and insurance monthly payment for 1 month. That's 1 month of reserves, and 3 months is just 3 times that number. So for example, if your PITI payment is $1,000, then your 3-month reserve requirement would mean that you need to have 3 months worth of reserves, or $3,000 in that instance in that particular example. So that can be in savings, that could be in checking, that could be in 401ks, IRAs, stocks, bonds, all those things that are liquid or somewhat liquid count as reserve requirements for these DSCR loans. So you can do up to 85% LTV. That's a 15% down purchase on these types of loans. What I always recommend though is that if you're doing 15% down, you got to feel like that there's a catch to that. And that means that, most loans are going to have mortgage insurance if they're over 20% or under 20% down for the down payment. So if you're doing 15% down on these, you're probably going to have pretty high rates. The DSCR ratio is going to need to be pretty high, and you're going to have a really, really good cash flowing property to be able to get something at 15% down. So it is possible to be able to do that. Usually it's just single family residences and condos and things of that nature are disqualified from this. But if you can get to 20% down, you're pretty solid on these DSCR loans going forward. 25% down, even better. Just be aware of the extra cost with the lower down payments though. That's what I would say, is to, definitely make sure. So first-time investors are definitely okay. If you own a primary residence and you don't own any investment property, you can absolutely do a DSCR loan. You probably have to put 25% down for the most part when you're a first-time investor, but that's okay, because after that, you're no longer considered a first-time investor. And sometimes even programs will allow us to do just 20% down for first-time investors as well. So don't discount yourself if you don't have 25% down and you just have 20% down. We could probably still do a loan for you as a first-time investor. Even first-time home buyers are allowed on this. So maybe you don't own any property, you don't own a primary residence, you don't own any investment property, you are considered a first-time home buyer and a first-time investor. And in this instance, we could still probably get you a loan going forward, but just know that it's very, very limited, and the restrictions are definitely going to apply. But after you buy your first one, you're no longer a first-time home buyer and you're no longer a first-time investor, then the whole playbook is going to open up for you going forward about what types of loans are available for you. Okay. You can go to credit scores down to 620 if you really needed to. So usually the better the credit, the better the terms, but you can still get a DSCR loan with a 620 credit score. It's very limited in loan to value. So you're probably looking at 60% loan to value at the very max. But it is still doable if you have a lower credit score, and maybe you need to take cash out to improve your credit score. So, if you have a 620 credit score, there's always a reason for something like that, but 620 credit scores are available. You can do non-warrantable condos with these DSCR loans, because they still have a pretty good equity requirement. They're still going to cash flow going forward. And even short-term rentals are allowed for us in these types of DSCR loans, which I love doing, because those things tend to really, really cash flow, especially if you have a good one in a good location going forward. Okay. So that's kind of an overview of DSCR loans in 2025. If you are an investor and someone that needs to learn more about this, please do me a huge favor. Reach out to me. I'd love to be the one that helps you buy an investment property or refinance your investment property in 2025. And I look forward to seeing you on the next show. Have a good day, guys. Bye.